Hey everyone, Ben here and welcome to Motivation to Invest. Is Boohoo stock a deep value investment right now? Well, in this video, you guys are gonna find out as I deep dive into the business model of the UK-based fast fashion retailer that is Boohoo. Now, for those of you guys which don't know, I've covered this company previously on the channel. We've had some major gains with the stock on the channel, but we've also seen some crazy volatility. So I'm going to dive into exactly why the stock is so volatile, why it's been so volatile. Then I'm going to get into the business model and finally my advanced valuation to see whether this stock could be undervalued right now. So without further ado, guys, let's dive in. So hopping right into the share price here, guys, over the past 5 years, you can see it's literally been a roller coaster if you've been an investor into Boohoo stock. Extremely volatile. And what I'm going to do for you guys, as you can see right here, so from April 2021, the stock is actually down 70%. But what I've actually created is a analysis of the stock price with the various events which have caused the major increases in the stock price and declines, because this is a very newsworthy company, I must say. So hopping into this chart I've created right here, we can see, firstly, we had the pandemic crash. Now, this was a general market crash. It happened in March 2020. I'm sure many of you guys were aware of that. The stock price dropped to £1.90 per share. Many of the guys on this channel and myself personally actually purchased the stock at this point here. We had some tremendous gains as the stock shot up. And this was mainly driven by surging sales as the company's loungewear division saw an increased number of users which were buying loungewear. The stock price hit a record high at £4.20 per share, so that was, over a 2x. Then some short sellers came out with a short seller report slating the company. This caused a decline. There was also a Leicester factory worker scandal. This caused a major decline. However, the company did respond really well to that, in my opinion. They offered to do a supply chain audit and offer more transparency on their supply chain. The stock price recovered, £3.47 per share. PwC, the big four, one of the big four accounting firms, they actually said, we don't believe you guys. We're going to actually distance ourselves as an auditor for the company. That was really some bad press again, and the stock price declined again. Now, all these situations up to this point here, they've all really been surface level as far as I'm concerned, based on a newsworthy scandal, and that caused the major stock price decline, even though the company still had tremendous sales growth and tremendously growing profits during this time, and they were continually investing to grow the business. For example, when other companies and other businesses, such as many large fashion retailers such as Debenhams, Burton's, and other struggling brands, were struggling during the global lockdown, which locked down brick and mortar retail, Boohoo took a leaf out of Warren Buffett's book and was actually being greedy when others were fearful and acquiring these brands. So that was a great move in my opinion. They acquired Debenhams for $55 million, not including the stores, just the brands only. And they successfully integrated Dorothy Perkins, Wallace and Burton brands into their online platform. So to me, they were really good strategic moves by the company. And it also begins production at its first manufacturing site in Leicester. So there's been quite a few good things happen, but really the main thing which has caused the most recent stock decline has been this high supply chain cost and supply chain disruption. And this has mainly been driven by high air freight costs. Now, this really is a global macroeconomic issue which is affecting many companies, including their competitor, ASOS, although not as much, I must admit. So that's really the factors right now. The difference between what's happened this time compared to the previous newsworthy scandals is this time it has actually affected the fundamentals of the company, the profits of the company, at least in the short term. So the company's reduced its sales guidance on the revenues from 20%, shall I say, to just 12%, which isn't a good sign. And it's also looked at its net sales, which have decreased by 12.5% year over year due to high dress mix. So a lot of people have been buying dresses for some reason, going out, etc. There's high returns on them, and that's resulted in the sales decreasing, the net sales, shall I say, for Boohoo stock. So there is some fundamental issues going on. Whether these will last forever, that is the uncertainty with the company. So the stock price is the same as it was in 2016. So really it's like the past 5-6 years didn't even happen according to the stock price. So that is really quite an interesting phenomenon and something which does seem a little bit strange to me, at least from an intuitive standpoint. Now, of course, the company is known for being a pioneer in digital marketing, Instagram, and really influencer marketing at a fundamental level. So they were one of the first to get really these Love Island reality TV stars to promote their product. They've even had partnerships with Jennifer Lopez, the Kardashians, and more recently, Megan Fox. Now, the company's closest competitor is ASOS, the global fashion player. Now, in terms of ASOS, what I've done is I've created a comparison table so we can compare the two companies. So hopping into this comparison table here, we can see ASOS has nearly double the revenue compared to Boohoo. So £3.9 billion compared to Boohoo's £1.9 billion. It's in the UK, guys, London Stock Exchange. Operating profits, 124 million, ASOS 190 million. And as you can see straight off the bat here, Boohoo tends to be growing a lot faster, between 10, 20, even 30% on its growth rate, whereas ASOS is only growing at 5 to 10%. So that is a lot lower. Boohoo also has stronger margins at 7.2% compared to ASOS's just 4.86%. So that's also another cost advantage for the company. So is the stock undervalued? Well, what I've done, guys, is I've created an advanced valuation model using a discounted cash flow analysis. And I've put an estimated 10% revenue growth for next year, 10% for the next 2 to 5 years. And I've expected the margins to hold steady at around 6%, very conservative. And I get a fair value of the stock of, wait for it, guys, I get a fair value of £1.09. Now, some of you guys may be thinking, Ben, that's not actually that great of a valuation, really, considering the stock price is around £1 at the moment. So it is undervalued, but only by around 7%. And I was looking at this and I was thinking, really, that's not great. Like, it's undervalued, but not massively undervalued. Looking at the most recent profits and predictions. So what I've done is I've used what's called a Monte Carlo valuation to do a scenario analysis for the company. And this will look at the company in really a best case scenario, a worst case scenario, and an average case scenario. And I've plugged in the numbers here. I've plugged in a 10 to 20% growth rate for years 2 to 5. I've put margins to increase between 6 to 9%. And really this is still, it's not really optimistic. It's more down really with a normal valuation of what the company would be at. And plugging in these numbers here, if I run the valuation model, you can see it's running there right now. We'll just wait for that to finish and we can see I get a mean valuation for the company of £1.85. Now that's a lot better. So that means the stock is approximately 85% undervalued right now. Now that's a seriously deep value investment, looking at the mean valuation. Now, this gives a range between £1.36 of what the stock could be worth, which in £2.45, which is the top end of where the stock could be trading at. So to me, the stock is definitely undervalued. It's definitely a deep value play. Now, does this make it any better for investors such as yourself that may have invested at the top of the market? Not really. But it's still a bit of consolation to know the stock is undervalued, and assuming these macroeconomic issues such as high air freight, shipping costs, etc., don't actually sustain forever. And the company is actually opening a US distribution center, which should help. So the stock could be a good investment for the long term. However, personally, I do expect a lot of volatility and maybe even a depressed stock price for at least the next year, maybe even 2 years. Now, of course, guys, this is not financial advice. It's not a recommendation to go and buy and sell any stock. And also, any stock that you've previously lost money on or made money on, you don't have to make that up in the same stock. So that's just something to be aware of. Also, I previously did a video on how to handle a stock market crash with my 5 psychological survival tips. But yeah, if you guys do have any questions, what do you think about Boohoo? What do you think about the company? Do you think the stock price will recover? Do you think the fundamentals will improve in the future? I'd love to hear your thoughts, so please do comment below. It'd be great to hear from you. And if you guys do want to join our thriving investor community where you can talk to me directly, ask me questions about your own portfolio, your own investment decisions, or maybe even join our investing strategy course where you can learn how to be an exceptional investor in both the stock market and also in property, then check out that first link in the description below. And with that being said, I hope you guys all have a tremendous day, and I'll see you in my next video. Invest safe.